Chinese companies are turning to the U.S. markets in an effort to raise cash. Eunice Yoon has more from Beijing. Eunice.
Thanks a lot, David. Well, despite the political tensions between the U.S. and China, New York retains its appeal among Chinese companies looking to list. Later this week, Didi, the Uber nemesis here in China, is going to be set to raise about $4 billion in an IPO this Wednesday. SoftBank-backed grocer Ding Dong lists on the NYSE, and hotel operator Ator is also going to be debuting in New York. And this comes after 29 Chinese companies raised about $8 billion in the first half of this year. New York's main draw, as you could imagine, is still the fact that it has a very deep pool of investors. And here in China, it's still a marketing tool. With domestically, people like to say, look, I have a listing in New York and I have arrived. And then also the accounting scrutiny is still seen as tougher, but at the same time, it's seen here now as targeted. So a bit of a more rational approach from what Chinese companies thought they might be facing. Now, Chinese companies aren't only feeling the pull of New York, but also a push from Shanghai. Shanghai and the Chinese government has been promoting the exchanges there as a place for Chinese companies to list. But at the same time, a lot of Chinese companies have been scared off by the recent crackdown on tech as well as private companies. In fact, in the first half of this year, 87 Chinese firms have canceled their Shanghai IPO plans on the tech board. And this is after regulators said that they really want to make sure that they tightened regulations and that they scrutinized what they described as potentially sick companies. Guys?
Yeah, Eunice, it's David. Specific to Didi, I think the books will close at 5 p.m. Eastern today. I think it's Wednesday when we'll actually start to see it trade. But any thoughts there? A $62+ billion market value, it would seem, at least initially. Any concerns for the company in the Chinese market where it's so dominant?
Well, the main concern that people have been talking about here is the regulation and the broader crackdown that there has been in technology. So that's going to be a main challenge for the company. But it does at the same time have very good relationships with the government. They've been in discussions with the authorities. So a lot of that tech crackdown has already been telecast, for any investors who are concerned about this broader regulatory environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.